Don't you just love waking up in the morning and getting on your Robinhood account to see all the money that you work so hard in your income-driven job? You put it back towards investments and you just see it working for you. And it's the American dream, man. It's great. And lately, the American dream has been a bit of a nightmare, depending on how you look at it. If you watch my last video, you can tell that I had a bit of mixed emotions, especially someone that's been investing in dividend stocks fairly new, almost a year now. I didn't really know how to take seeing the stocks drop every single day. And then after a while, you just know what's going to happen. Then you grow educated and you understand the position that you're in and the position that the stock industry is in and knowing what's going to happen next. So there's a lot of negatives going on in the world. It's really sad, and all the fear that's happening is directly impacting these stocks. You have high ETFs, Dow, S&P 500. They're all experiencing ridiculous new lows, and the Federal Reserve is playing the biggest hand that they could possibly play. They have cut interest rate to practically 0%, which in hindsight should be a good thing. It shows that they're saving a lot of money to therefore have a savings account for these businesses just to keep them head above water. But the news did not respond well. Overnight, the S&P 500 and Dow dropped at least 5%, and people are getting fearful again and pulling more money out. So if you check your Robinhood stocks right now, you're probably going to see some drops. But you have to be positive in these situations, guys. It's going to make life so much better for everyone. I know it's easier said than done, but hopefully in this video you understand that positivity can be achieved as a dividend investor, because there's a lot of companies that have turned the hands of time and that are just as cheap as they were months ago. And you know that every recession ends in an upward gain. So you know these companies are only going to be on sale for a limited time, kind of like Black Friday. So you have to take the opportunity that you have now. So this video, I'm going to share with you my top 5 dividend investment companies that I plan on, or if I haven't already bought, that I plan on buying very soon during this upcoming recession. So let's get it going. Wait, one second. Okay. Can never be too prepared. All right. Hey, what's going on, guys? My name is Darren Jackson. If you're an investor, you've definitely seen the volatile adjustments that the stock industry has been making with news breaking out about investment drops and companies shutting down businesses in other parts of the country, and cases of this pandemic increasing, and unfortunately death toll slightly increasing. It's been really intense out there, and stock markets have responded. And if you watch my last video, I talked about how as a new investor, let alone a new dividend investor, I was starting to learn that the voice of the people highly determines what happens with prices. I mentioned the fear versus greed index, and lately the fear aspect of that has been ridiculously high. People are getting scared, they're pulling out money, stock prices are dropping lower and disappearing as fast as toilet paper at grocery stores, which I really don't understand, but I mean, people really need toilet paper. It's crazy. But throughout all of that, I've noticed that there's so much opportunity that can be taking place during this period of time. ETFs are getting hit harder than anything, but within those ETFs, there are equities that shouldn't be dropping, but are, just because they're partners within the Dow and S&P 500 are. So within those companies, I did a lot of research and I got some advice from other investors. And today I'm going to talk to you about my opinion on companies that I plan on investing in, that I feel like are going to be beneficial for you to invest in right now, especially in the long term, if you're a long-term growth investor and dividend investor like I am. So let's get to it. All right, so the first company that I would consider investing in right now is a company that you may have not heard of. And it's okay, because I hadn't heard of it either up until a couple of days ago, but it's called Outfront Media. Now, Outfront Media is an outdoor media company. All the billboards that you see when you're driving on the highway or down the street, they're more than likely responsible for that. And they're working on not only building just regular picture billboards, but going into the digital side. So there's a lot of growth with that, especially with these high technological advances. Now, aside from their $1.7 billion annual salary, what was really attractive to me about this company is the fact that they've increased 7.8% in quarterly earnings as of last quarter. I think they earned about $488 million, which is ridiculous. And that increase helped support their reasoning on increasing the dividend earnings by 2 cents, which doesn't seem a lot, but if you have multiple shares of this company, then it is significant. And that point is a little bit easier because right now, Outfront Media runs at about $15 or $16 per share. And a couple of months ago, before this pandemic started, it was at about $30. So the potential for growth in the long run is really high. Now, the dividend percentage yield is actually a little bit on the higher side, and that may not be the greatest thing. And that's something we can definitely get into later on what is the most beneficial percentage of dividend yield in a dividend stock. But considering the fact that they only have a payout ratio of about 52%, that makes it way more appealing. And really quick, for those of you who may not understand what payout ratio is or how significant it is, what it basically means is that percentage is how much that company is giving towards their investors in the form of dividend checks. So if a company is offering you a high amount of dividends and you find out that that only makes up about 30% of how much they actually made, then that 70% they can put back towards their own company, which they can use to make enhancements, advancements, open up new shops, which could offer them more revenue, which could offer them more growth to give towards their dividend investors. So therefore, you're getting a pretty nice dividend investment and it's pretty low in comparison to how much the company's getting, then get ready for more dividend checks as long as that company doesn't suddenly tank out of nowhere. The next company that I'm planning on buying funds in, and which you should too, is Best Buy. Best Buy, the best explanation I can give it is like the Target of tech stores. You can probably find cheaper prices somewhere else, but you just really want to be there and it's really hard to leave. They have products from headphones to 4K TVs to cell phones to any type of laptop you're looking for. They have it all. And with the addition of Geek Squad that works as an on-site IT service or a drive to your house IT service, they're definitely a household name. What I like a lot about this company is that they've been consistently growing the stock market for the past 8 years. They have a very attractive dividend annual percentage yield, and their payout ratio is even better than Outfront Media at about 36%, which is amazing. That shows you how much they're actually putting towards making their company better. But what attracts me about this company particularly the most is that they've experienced a 15% dividend growth in the past 10 years. So it's showing you that they're making enough money to put towards their dividends so they can continue to attract their investors and hopefully attract more investors, and letting them know that, hey, if you stick with us, you're more than likely going to see a gain in your APY every year, because that's what we're shown to be known for. So that's another company. The third company that I would look into is Johnson & Johnson. And I know what you're thinking. They're kind of a health-based company. Some health companies may not be doing the greatest just because they're running out of a lot of items. People are going stupid. Toilet paper, I get it. But Johnson & Johnson focuses on a lot of other reliable healthcare products, from Band-Aids to Tylenol to contact lenses and contact lens care products. These are products that you're going to need regardless of what is going on in the world, because you want to be able to see, you want to be able to get rid of your headache that's caused from anything in your life, and you want to be able to cover a little cut that you get on your arm. No matter if there is an epidemic or a pandemic or if any paper towels or hand sanitizers get ran out. So that's what makes this company very attractive. Now, what's crazy about this company, aside from the fact that it's also a dividend investing company, which I'm gonna stop saying because they're all dividend investing companies, I'm a dividend investor, so we're gonna cut that out, is the fact that they've been growing for 57 years. I was negative 30 years old when the growth began. Man, negative 30 years old, it was good times. It was good times. But seriously, that should show you how reliable this company is. No matter the situations they go in with lawsuits and declines from the 2008 financial crisis and how that might have impacted them to this, they are showing a consistent growth for over half a century. So if that doesn't attract you to this company, then honestly, I don't know what will. The fourth company I would look at is Disney. And we all know what Disney's all about. Cruises, Disney Plus, Disney Channel, ESPN, Marvel, Star Wars, now Fox. They are a huge platform in the world, and they're going to continue to be a huge platform in the world. So the amount of losses that they're experiencing due to the pandemic are understandable, but you can also understand that once this thing kind of blows away, hopefully very soon, then Disney is going to start growing just as fast as it was previously. And that's a company that I would jump onto as soon as possible, because right now they're 33% off their 52-week high. So you have a 33% discount, which I would definitely take advantage of right now if you obviously have the money for it. So definitely consider that. And the last company that I would get into is Apple. Now, Apple is still a little bit more on the expensive side. I'm pretty sure it's in between $250 and $260 a share as we speak right now. But earlier this year, it had reached up into the $300 mark. So you're still experiencing a very high discount. And just think about the company. It's one of the top smartphone companies, even though in my opinion, Samsung is better, but that's just me. They help start and continuously expand the smartphone race and redefining what it is to have a smartphone, MacBooks, the cloud. They're all about technological advances, and they're leading that runway again, besides Samsung. So you have to think about what that's going to mean in the long run. So that alone makes Apple a very attractive company, especially the fact that they have a 22% payout. So you know that they have a lot of money that's going back towards their company, and that leaves room for better opportunities for everyone, including dividend investors and just long-term growth investors in general, and even options traders. Everybody gets a hand on it. So that's definitely something that you want to keep in mind. So there you have it, guys. In my opinion, those are the top 5 dividend stocks that I'm looking towards buying or have already bought already. Best believe when this whole thing hopefully sells off by the end of this year, I will display my stock portfolio and update you guys on what I personally bought throughout the constant drops and how it's hopefully positively affected me in the long run. Otherwise, toilet paper's still gone. I'm probably gonna have to invest in a bidet. That's what it's come down to. I'm probably gonna have to buy a bidet. If you have a bidet, please leave a comment below and let me know how that is. Otherwise, guys, I hope you enjoyed the video. Make sure you like this video because it's definitely gonna help me in my personal YouTube growth in the long run. Make sure you leave a comment if you have any questions, comments, concerns, anything you agreed or disagreed with. You know I love having conversations with you guys. Obviously, until next Thursday, when hopefully I'm talking about something that's probably gonna pertain to this because that's what's going on, will be going on for a while. Take care.